Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP, so let's just dive in and let's start off with this video here from 801_XRP. And this is a video from John Rose, where he is talking about Gary Gensler, and he's also talking about the SEC and how the ball was dropped. We've seen not only one of the worst failures of an agency like the SEC in history, but we also seen a failure to protect investors. Now, although these discussions are great, and you really want to look at the SEC as like one of your friends because they are trying to protect you, but at the end of the day, we all know that that is not the case. We know that they are trying to protect the big banks. We know that they're trying to slow innovation down around crypto. And this entire FTX situation was an entire orchestrated play, and it was their plan to make crypto look terrible so that they could 100% go after it as hard as possible, regulate it to the fullest extent, and try to control this market internally. And listen closely to this video, and then we will talk more so about a few things after.
The collapse of FTX. Mismanagement of funds, the use of complex margin and collateralization of certain digital assets, and of course, alleged fraud. The timing of the events of the last 12 hours is certainly interesting. As a recovering attorney, it makes me wonder why a prosecutor wouldn't want to potentially add lying to Congress to accompany the list of charges against Mr. Bankman-Fried. It also makes me wonder why the SEC waited until today to file its own charges. Frankly, Chair Gensler has failed at his job, and worst of all, he has failed to protect investors, which is one of the key components of the SEC's tripartite mission. Similarly, while he has been asleep at the wheel, the Democratic majority has failed to have him to testify before this committee for over 14 months, which I believe is a disservice to investors. I hope that in a few weeks that we in the new Republican majority will finally start to hold the Biden administration accountable for their.
So, yeah, I mean, at the end of the day, I think that a lot of these individuals have too much faith in the U.S. government, something like that. Maybe it's just one show, but like, we even do see over here from XRP Crypto Wolf, we do see Congressman Tom Emmer accuses the SEC chair Gary Gensler of being aware of the FTX fraud. He 100% was aware of it. I've talked about this many times on this channel. We do see a few things from Gary Gensler. He's talking about how, Sam Bankman-Fried built a house of cards on a foundation of deception while telling investors that it was one of the safest buildings in crypto. Like, we all know what the SEC is trying to do around this FTX situation. They're trying to play, the white knight. Hey, we were here, we were trying to protect you guys, but this definitely, just blindsided us. No, that is not what happened. Listen, first off, Gary Gensler met with Sam Bankman-Fried multiple times. He knew about FTX. He understood that, I mean, anyone could take one look at the FTX business plan and know that it was a fraudulent company from its inception. It's crazy. It's crazy to me that more and more individuals are not realizing this. I know that there's a large portion of them out there, but the right individuals need to realize what is happening at the SEC. And maybe they already know, but maybe they are backing the banking, the entire banking system. We talked about this in a video just yesterday. We were talking about Brad Sherman and how he is not only one of the biggest skeptics around crypto. He's actually, I wouldn't even say skeptics. He's so anti-crypto, it's unbelievable. And guess who he supports? The American Banking Association. One of the oldest. I'm saying like this goes all the way back to the 1800s. It's an organization that lobbies for the banking system. It's crazy to me. And over here, we do see the collapse of FTX is not an indictment of crypto. It's an indictment of those who misuse customer assets. As I've said for months, Congress needs to give regulatory clarity so business flows to prudent, sensible, well-regulated American crypto exchanges. And listen closely to this one, and then we will move on.
I think the testimony yesterday it underscores a very, very important point. This really looks like garden variety fraud that has happened in the past usually with dollars or securities of a conventional sort. And here it happened to happen with crypto. it is not an indictment against crypto. It's an indictment against the guys who misused it. And we should make that distinction, and Congress should finally pass the legislation that I've been urging us to pass, which would provide the regulatory clarity so that we don't have this ambiguity as to who's got the authority here, who doesn't, and how does it get regulated. We need to eliminate that regularity. Then we would have business flowing to prudent, sensible, well-regulated American exchanges.
And, at the end of the day, it's going to be a while until we have proper regulations around crypto, in my opinion. What really needs to happen, and I mean this with all certainty, we 100% need a win on Ripple's side around this SEC case. Because if Ripple does not win, things are going to get really, really bad around this industry. And also, we've seen from a Cole over on Twitter, we do see bank just closed and emptied my accounts due to previous FTX wire deposits. If your bank account ever touched FTX, good chance it's getting closed. Now, a lot of people were kind of concerned over this. We've seen a little bit of a discussion on what actually happened around this. They sent out, I forgot what happened. I remember it was like a lot of people were kind of shook over this, but it was more so that they were sending cashier checks back to him to not only give him back his money, but they emptied and closed his account because of the, I guess, exposure to FTX. So they wanted to make sure that there was no more exposure to that account. They sent him a cashier check with all of the money that was in his account. But yeah, they closed it and emptied it because of the connections here. Now, in my opinion, this will most likely continue on. I think that a lot of individuals that were exposed to FTX will most likely have their accounts closed and emptied, but the money is not going to disappear. It's going to be sent back to you in a cashier's check. So this was a little bit of an outrageous statement, but I will say this is very interesting because I believe that at some point in time, we might even see banks start to do this with any exposure to crypto. Why do I say that? Well, it's very simple, right? The banking sector is against crypto. We just seen Canada ban crypto leverage and margin trading after the FTX collapse. We started to see a lot more areas around the world pushing for major, not only regulation, but also control over certain crypto exchange trading mechanisms like leverage and margin trading. But this is very interesting to me. And again, I think that this is going to continue to spread like a wildfire, and it's going to all support what? Their pushed agenda around CBDCs. We do see over here from Nathan Price, Nate855 over on Twitter. We do see here central bank money as an anchor, back it up. Unbacked crypto assets offer no benefits to society. And check this out. So we do see fundamental flaws in crypto finance. Unbacked crypto assets offer no benefits to society. By the way, this is from the ECB, their official website, ecb.europa.eu. We do see stablecoins are exposed to runs. Crypto markets are highly leveraged and interconnected. And then over here, we do see the destiny of digital finance, regulating crypto assets, addressing financial risk, addressing and internalizing social risk, balancing innovation and stability, and anchor of stability for the broader digital finance ecosystem. Only central bank money can provide this anchor of stability. Now read that one last time. Only central bank money can provide this anchor of stability. So do you know what is going to happen from this? They are going to try to push heavy, and I mean heavy, for central bank digital currencies because that is going to be the only, in their quotes, safe mechanism of money. They don't care about crypto assets. They don't care about digital assets. They want something that they can control, that they believe you will believe that is like, oh, it's 100% safe. It's coming from the central bank. They're not going to do anything to harm it. No. We already seen from Europe, the ECB, that with their central bank digital currencies, they want to put limits on your spending. They want to limit to what you can buy. They want to limit you to a certain amount per month. Like, when we look at what's happening around crypto, it is all pre-planned to push for this absolute nonsense. And this is happening very, very fast. And this already happened. Like, this was in plan for a while, going all the way back to June. And now we do see even October and then October 10th. Like, all of this was happening during October and even June. And it was preparing us for what is next. Because Every single major situation that happens around crypto, we'll talk about FTX, we'll talk about Luna, whatever. They're going to utilize these as hard examples of why we need central bank digital currencies that are controlled and issued out by no other than the central bank. They want to control this money. They don't want you to be utilizing digital assets and crypto assets that they can't control. This is concerning to me. And by the way, yes, we are constantly seeing a major push for a cashless society. We do see over here from Gold Telegraph, the Swiss National Bank vice president recently said that Switzerland had seen a 10% drop in the overall value of banknotes in the economy. Is cashless really a coincidence? I don't think so. And then over here, we do see the European Union is now prioritizing the creation of the digital euro for 2023 and 2024. What an interesting time frame. A joint declaration of EU legislative priorities for 2023 and 2024 mentions the creation of a central bank digital currency for the EU on some tangible assets. Things are getting very interesting right now around crypto, around the world of finance. I honestly want you all to realize that what we are really seeing around the SEC, around FTX, and all this kind of stuff, like this is all noise. I don't know what's going on with some of these congressmen. Like, I don't really care about what we are starting to see around like this entire area being pushed by some of these congressmen and some of these higher ups, because a lot of them are one Bitcoin maxis that are trying to push for just Bitcoin to have some sort of regulatory clarity and all that kind of stuff. But what we do see from most of them, like this, or I shouldn't say most of them, from a small percentage of them instead of most of them, like Tom Emmer or even Pat Toomey, is an insight on why we need 100% regulatory clarity that is not stifling for these big businesses and these large American crypto exchanges that are trying to not only be successful, but also promote US innovation around the next frontier of finance, which is crypto. In my opinion, when we look at the future of finance, when we look at the future of payment technology and we'll say cross-border payments, remittances, all that kind of stuff, I don't think about the legacy system. No, I think about crypto because at the end of the day, we all know that the legacy system is inefficient. It's broken. It's a failed system. Not only is it a failed system, but the central banks that are trying to push for just central bank digital currencies, they are the ones that are the big players behind it all. And guess what they are doing? They are failing at their job. We've seen this happen year and year and year after year, going all the way back to 2008. 2008 is a perfect example of how these central banks and these big, individuals around the monetary system, they have no clue what they are doing. This is why we need the next revolution to happen around finance and around payments to make everything fully transparent so that we could see the issues arising before they get far too big to ignore. And that is exactly what is happening right now in our world as well around inflation and around the current economic outlook. This is a big problem. And when we look at central bank digital currencies, I'm telling you, they are trying to push for and I say we'll just say centralized, right? They want centralized digital currencies and digital assets. They don't care about DeFi, and they surely do not care about certain assets that they can't control. They want to push for control around this next frontier of finance. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on if you guys have more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. As always, up to you all. Have a beautiful day, beautiful night, wherever you guys are on this beautiful world. This has been Nick. Peace out, guys.